Welcome to the Deep Dive. We're your shortcut to really getting under the hood of the companies shaping our future.
That's right.
And today, we're not just skimming a report, we're doing a full deep dive into Euler's first quarter 2025 earnings call. Our mission, as always, is to cut through the noise, pull out the critical figures, and really unpack the insights that matter.
Especially for a company like Euler's working in physical AI.
Exactly, physical AI. It's essentially giving machines the ability to, see and understand the real world with incredible precision.
Right, like humans. But, well, with potentially more consistency in data. Think self-driving forklifts, smarter city traffic.
All that stuff, it enables so much.
And Euler's sits right at that intersection of hardware and AI. It's a really vital space for automation and optimization.
So understanding how they're doing gives us a window into these bigger trends.
Absolutely. Industrial automation, smart infrastructure, even autonomous vehicles, it touches a lot.
Okay, let's kick off with a snapshot of their Q1 results. What are the headline numbers?
All right, so revenue came in at $32.6 million for the first quarter.
Okay, $32.6 million, and the margins. I heard that was a standout.
Yeah, gross margin was strong, 41%. And that actually includes a $1.5 million patent royalty payment they received.
41%. That is pretty significant. What about sensor shipments?
They shipped over 4,700 sensors during the quarter, so solid product demand there.
And financially, how are they looking overall, balance sheet-wise?
Really robust. They ended the quarter with $171 million in cash and equivalents. And importantly, zero debt.
Zero debt. Wow. That gives them a lot of flexibility, doesn't it? Especially in a capital-intensive area like this.
Exactly. It's a strong foundation. Plus, management highlighted winning multi-million-dollar deals across all four of their key verticals.
That's a good sign, shows broad market acceptance, not just relying on one sector.
Definitely. And looking ahead, their guidance for Q2 revenue is between $32 million and $35 million.
Okay, 32 to 35 million for Q2.
And what's really telling is this marks their 9th consecutive quarter of meeting or beating their guidance.
9 quarters straight.
Yeah.
That kind of consistency, well, it suggests they've got their operations pretty well figured out.
Yeah, it really points to capable operational execution. It's becoming a hallmark for them.
Okay, so that's the snapshot. Now let's really dig in. What's driving these numbers? Let's start with that financial performance, specifically that gross margin.
Right, the 41%. It's up 200 basis points year over year.
So a 2 percentage point jump. What's behind that besides the royalty?
Well, higher revenues helped, and also a favorable product mix. The $1.5 million patent royalty, it did give a nice boost, about 300 basis points to both GAAP and non-GAAP margins.
Okay, so about 3 percentage points from the royalty alone.
Yeah. But even backing that out, the underlying performance is solid. And for Q2 guidance, they're assuming no more material revenue from that royalty.
Which makes their ongoing target seem pretty sensible, right? That 35% to 40% range.
Exactly. They view that 35% to 40% as the right annual target, even though they're currently hitting the high end. It seems prudent.
So managing margins well. What about operating expenses? Are they keeping costs in check?
GAAP operating expenses were $37 million. That's up 12% from last year.
Okay. What drove that increase?
Primarily higher litigation expenses. Management acknowledged these costs can fluctuate, based on R&D spending and legal stuff quarter to quarter.
But are they trying to control it overall?
Yeah, they said they remain committed to keeping operating expenses at or below the levels they saw back in Q3 2023. So definitely a focus on cost control.
Got it. And that balance sheet, $171 million in cash, equivalents, restricted cash, short-term investments, strong position. Did they tap their ATM offering this quarter?
No, they reported zero proceeds from their at-the-market program. They seem pretty happy with their Q1 cash burn rate.
Which suggests good operational execution and careful balance sheet management.
Exactly. Crucial for a company like this, gives them runway to invest without immediate pressure.
Okay, solid financials. What's the strategy? What's driving them forward? They mentioned 3 pillars for 2025.
Right. 3 key areas. Scaling the software-attached business, transforming the product portfolio, and executing towards profitability.
Let's start with software. How's that part of the business doing?
It was actually their strongest quarter yet for software-attached sales. They secured their biggest contract ever in Europe.
Okay, largest ever in Europe. Any specific examples that bring this physical AI concept to life?
Yeah, a really good one is their partner Econolite winning a 5-year deal with the Utah Department of Transportation.
Utah DOT, what are they deploying?
They're using Ailer's Rev 7 sensors and the Ouster Blue City software for traffic flow management, safety improvements, operational efficiencies.
That sounds like a significant real-world application.
It is, and they see potential to expand this to other states through the U.S. DOT's Connected West project. Could be a real growth driver.
Interesting. So software's growing.
Yeah.
What about the second pillar, transforming the product portfolio? Sounds like a big undertaking for 2025.
It is. They're refreshing pretty much everything. New hardware, updated firmware, better SDK features, more software functionality.
Any highlights from this refresh? What's catching your eye?
Well, one key thing is the new on-sensor 3D zone monitoring firmware.
3D zone monitoring, what does that enable?
It's for collision avoidance on moving vehicles, not just warnings, but actual deceleration and emergency stops. They've already landed a program with a huge material handling equipment manufacturer because of it.
So directly impacting industrial safety and automation.
Exactly. Big potential to expand their industrial footprint. And on the management side, their cloud portal for Ouster Gemini is seeing rapid adoption.
Why is that portal important?
It just makes it easier for customers. Secure configuration, management, viewing LiDAR deployments all through one interface. Dozens of customers are already managing hundreds of sites through it.
Makes sense. Easier management drives adoption. What about the NVIDIA collaboration on Ouster Blue City? You mentioned that for the Utah deal.
Yeah, that's a big one for smart infrastructure. Blue City is the first digital LiDAR solution using a deep learning model for traffic management.
Deep learning on the sensor itself, or at the edge.
At the edge. They hit a major milestone with NVIDIA, training the AI model on over 4 million labeled objects from 800 sites. NVIDIA's tech enables that real-time inference right where the data is collected.
Faster decisions, right there at the intersection.
Precisely. Yeah. And it builds on their existing NVIDIA partnerships across Drive, Isaac, Metropolis. It's a deep relationship.
Okay. And looking further out, they talked about next-gen L4 and Chronos custom silicon. These sound pretty fundamental.
They are. They're on track, expected to bring big jumps in performance, reliability, security. And here's the kicker. Management estimates these could more than double Ailer's current addressable market.
Double the TAM. How?
By unlocking new use cases, new applications where maybe LiDAR wasn't feasible before due to cost or size or power needs, it fundamentally reshapes their market potential.
That's huge. And they seem to be validating this with actual deals, too. Can you give examples across their main verticals?
Sure. In smart infrastructure, they expanded their deal with LZ Pico. That was their largest software-attached deal in Europe, using Rev 7 and Gemini.
Okay. What about industrial?
Big one. They're a multi-million-dollar deal with Komatsu. They're putting Ailer's sensors on Komatsu's next-gen autonomous mining equipment.
Replacing older tech.
Yeah, replacing legacy 2D LiDAR with their short and long-range Rev 7 sensors. The goal is better productivity, lower total cost of ownership in those tough mining environments.
Makes sense. And automotive. That market's been slower for LiDAR overall.
They're still making progress. Chosen by the mobility subsidiary of a global OEM to supply sensors for autonomous vehicle development.
So still in the development phase mostly, but getting wins.
Right. And in robotics, they expanded their relationship with Aldor, world's largest mapping and navigation provider. Aldor is using Ailer's digital LiDAR and AI software for real-time perception.
So broad progress across the board, significant wins.
Definitely substantial votes of confidence in the tech and the strategy.
Got it. Before we move to the investor context, just a quick note on leadership changes.
Right. Ken Gianello was appointed the new CFO, effective May 19th, and the interim CFO, Chen, is moving to SVP of Strategic Finance and Treasurer.
Okay. And what about the bigger picture? Macroeconomics, geopolitics, how are they navigating that?
They acknowledged it's, a fluid situation. They've looked at tariff impacts on costs and are working with customers to mitigate them.
Do they expect tariffs to derail their long-term plans?
They said they don't expect the current proposed tariff levels to prevent them from achieving their long-term financial framework, but there's always uncertainty.
Understood. Okay, let's shift gears now and put this all into investor context. What questions came up? That gross margin sustainability was one, right? Why not raise the target?
Yeah, analysts asked why that 35% to 40% range hasn't been lifted, given they're performing above 40%.
And the answer?
Management said the range is still appropriate on a GAAP basis. They acknowledge the software contribution is a positive tailwind, but they plan to break out software metrics separately once it becomes a more significant chunk of the business.
So it's growing, but maybe not quite big enough yet to fundamentally shift the overall company margin target.
That seems to be the thinking. They're waiting for it to scale more before making that change official in the guidance.
Okay. And those new products, L4 and Chronos, they call them transformational, doubling the TAM. How should investors think about that given product details are still under wraps?
Right. Specifics are confidential, but the companies stress that they're having ongoing confidential talks with key Tier 1 customers.
Big established players.
Exactly. And those talks are apparently reinforcing the value of this new digital roadmap. It's helping cement long-term relationships and, crucially, moving those customers towards production scale.
So even without public details, the key customers are seeing the value and planning for it.
That's the implication. The validation is happening behind the scenes.
This path to production seems absolutely critical for companies in this space. What are the main hurdles getting from R&D to full deployment, and how is Ehlers tackling them?
It's definitely the key transition. Ehlers talked about their rigorous testing processes with customers, firmware, hardware, software, features like that 3D zone monitoring we mentioned. That's helping customers meet the final really tough requirements.
Things like ruggedization, environmental specs.
Exactly. And functional safety, that's a big one. It's about getting entire groups or tranches of customers over the line from R&D into actual production.
And they expect this process to fuel growth for years.
That's the plan. They anticipate more announcements like the Komatsu deal as more customers make that jump.
Let's talk more about that functional safety market. Sounds like a huge opportunity.
It is. It's a major focus for their future products. The idea is the LiDAR itself provides the safety certification needed for human-robot interaction.
So the LiDAR guarantees the robot stops safely if a person gets too close.
Essentially, yes. This could save customers a ton of time and money by simplifying the overall safety system design. Less need for extra redundant sensors or complex guarding.
Huge potential value add. Do they have a timeline for when this will significantly impact their business?
The opportunity is definitely immense in that established market, but they didn't give a specific timeline for a major impact on their results just yet.
Okay. What about robotaxis? That space seems to be heating up, at least in North America.
Yeah, adoption has accelerated. You see customers like May Mobility just announced that Uber network contract.
Right. How's Ehlers positioned there?
They stated they primarily focus on the North American market for robotaxis and don't actively participate in the Chinese market. So a focused approach there.
Got it. And warehouse automation, how wide is their net there?
Pretty wide, it seems. They confirmed opportunities across the whole modern warehouse, from driver assist systems on human-operated vehicles all the way to fully autonomous forklifts and AGVs.
So hitting multiple levels of automation.
Exactly. They feel well positioned to capture those broad trends driven by ROI, labor shortages, safety needs.
What about humanoid robots? Lots of buzz there.
They see them as leading edge, definitely interesting, but the business model and timeline are still pretty uncertain. So not expecting humanoids to drive near-term business for them.
Okay, practical focus. Let's talk pricing. LiDAR prices generally expected to fall, right? But Ehlers had a slightly different take.
Yeah, generally prices fall over time, but Ehlers emphasized the stickiness, the loyalty, I guess, that their LiDAR creates. Combined with new tech like REV7, they've actually been able to offer increased value.
And that sometimes means higher prices.
Sometimes, yeah, leading to higher average selling prices or ASPs. Their main point was that for most of their customers in these industrial and infrastructure applications, pricing isn't the main barrier holding back volume. The economics work.
Interesting. So adoption speed isn't primarily a cost issue for them. How does the CEO feel about the overall pace of LiDAR adoption?
He admitted to being impatient for faster adoption, which, you hear a lot in cutting edge tech.
Sure.
But he also noted the industry is generally tracking along the lines of their long-term models, and advancements in AI, edge computing, partnerships like the one with NVIDIA. They're all making these physical AI systems better, cheaper, and faster to deploy.
So underlying optimism for the industry's direction.
Definitely a positive outlook overall.
Okay, finally, the competitive landscape. How does Ehlers see its position relative to other LiDAR players?
They basically reiterated their long-held view. Diversifying beyond just automotive was the right call, especially since auto LiDAR adoption has been slower than maybe initially hoped.
And what about competitors trying to move into Ehlers' turf, the industrial infrastructure spaces?
They observed that attempts by autofocus competitors to pivot into these non-auto areas have mostly been fits and starts, kind of lacking the sustained ground-up effort needed to really compete long-term in these diverse markets.
So Ehlers feels they have a lead there.
They believe they've emerged as a leading player in these diverse end markets. Yeah. A result of that early strategic decision to diversify.
All right, fascinating context. Now, let's move to our This Is Not Financial Advice segment. Purely for intellectual stimulation and maybe a bit of fun, what's an outrageous but plausible trade idea based on all this?
Okay, disclaimer firmly in place. Given Euler's consistent execution, these expanding multi-million-dollar deals across different verticals, and that potential doubling of their market with the new silicon, well, one could consider a long position on Eulers.
Okay, going long Eulers. The thesis being?
The thesis hinges on that accelerating adoption of physical AI in these commercially viable non-automotive areas, places where Eulers has built a strong foothold and seems to have a competitive edge over rivals who are still, figuring out diversification. It's a bet on their strategic foresight paying off.
Makes sense. Any alternative ideas? Maybe something a bit more complex?
Well, you could think about a pairs trade. Long Eulers, short a publicly traded LiDAR competitor that's still heavily focused on automotive and hasn't shown as much traction in industrial or smart city applications.
Right, playing the diversification angle directly.
Exactly. The idea there is...
Yeah, you heard how their business is expanding those multi-million-dollar awards, the growing base of software solutions. It really does underscore customer confidence, both in the products now and the roadmap ahead.
And the call really highlighted the accelerating real-world adoption of physical AI. You see it in warehouses, mines, smart cities, robotics. And Eulers is positioning its digital LiDAR and AI software right at the center of that shift.
Definitely a company operating at a key intersection. Now, as always, remember, this discussion is just for informational purposes. It's not financial advice.
Any investment decisions you make should be based on your own research, your circumstances, and probably talking to a professional.
And maybe leave you with a final thought to mull over. How quickly will that tangible ROI from physical AI in logistics, in smart infrastructure, how quickly will that translate into truly exponential revenue growth for companies like Eulers?
And beyond the usual quarterly numbers, what specific milestones should you be watching for as proof points that this acceleration is really happening?
Something to think about. Thanks for diving deep with us.